The pivotal event is taking place on a Thursday. The U.S. inflation report is sure to take center stage this week. While market sentiment depends entirely on speculations about further policy moves of the Federal Reserve, which is committed to its crusade against high inflation. Market participants will get to know the CPI for December. Watch a regular calendar on InstaForex TV channel to find out what other high-impact events are due at the end of the week. The first thing in the morning, traders learned about inflation in China. And like the rest of the world, China has been recording sluggish inflation rates due to tough restriction measures. Slow inflation subdues economic growth in the world's second-largest economy. Analysts predict that inflation has been perked up steam in anticipation of Beijing's intention to relax restrictions. The authorities set the inflation target at 3% that will ensure healthy economic development. Even though the red-hot CPI is far from the target, the move in the right direction can be viewed as a good omen, which could boost the appetite for risk. Hence, this is bullish for the Australian dollar, a barometer of the risk-on mood in the Asia-Pacific region. Inflation data for the United States will be available during the New York session. The forecast is optimistic. Analysts suppose that the annual inflation rate could have eased to 6.5% in December, which confirms the efficiency of the Fed's countermeasures. Previously, the federal funds rate has been raised aggressively by 75 basis points and even by a percentage point at a time. From now on, the pace of rate hikes could be moderated, or monetary tightening could be even suspended so that the Federal Reserve could judge whether the auctions have proven their worth through economic metrics. Importantly, most Fed policymakers share the hawkish rhetoric, unwilling to take the wait-and-see approach. They appealed to their colleagues from the rate-setting committee to go ahead with the monetary tightening and maintain the interest rate above 5% for a considerable time. The policy is malicious for the U.S. economy and bullish for the U.S. dollar. However, investors are full of hopes that the news on a slowdown in inflation will assure the Fed to soften its rhetoric. So, we expect short-term weakness in the US dollar after the CPI release. Another report worthy of attention in China's trade balance for December, which will be published on Friday, January 13. The largest export-focused economy is considered the powerhouse of the global industry. It will shed light on the current state of affairs in the global economy. Indeed, if the economy is healthy, consumer activity and foreign demand will click into gear. The World Bank has already scared off investors, downgrading its forecast of the global GDP to 1.7% for this year. The trade data from China might encourage the market. The forecast is pessimistic. China's exports are expected to shrink by 10%, but the actual rate could reveal a milder decline. If the news is positive, the Australian dollar will assert its strength. Investors will hardly find any glimmer of a hope in the British statistics, painting a dismal picture of the domestic economy. The industrial production contracted at a faster pace in November, thus clouding economic growth. The Bank of England has already acknowledged that the recession is underway. Moreover, the regulator warns of a protracted recession. In this context, the central bank intends to soften its stance and phase out the pace of rate hikes, or even halt the cycle of a monetary tightening. With such prospects, the pound sterling is losing its investment luster. Let me remind you of another interesting report which will be on tap at the end of the trading day on Friday. A consumer sentiment index is provided not by a government agency but by the University of Michigan. This survey defines the current conditions in the US economy, and the reading showcases steady improvement in consumer sentiment. So, bearing in mind a slowdown in inflation, this trend seems realistic. Investors will certainly welcome such news and regain the risk-on mood, which will encourage a rally of Wall Street indexes. How we're going to be in the short term, we will definitely tell you in our next news releases. Don't miss them and stay up to date with us. Subscribe to our channel and see you.